Returning to the Fed, Kansas City President Jeffrey Schmid giving his reason why he dissented in favor of no rate cuts at the October Fed meeting. Bloomberg's Michael McKee joins us now with some more insight. Mike, what's his rationale?
Well, Jeff Schmid is putting out his reasoning behind his dissent, which was kind of unusual to not cut during the month of October meeting, the Fed's blackout period ending last night. And Schmid is saying basically he disagrees with the way the Fed is looking at the balance of risks. He says in his statement, "I do not think a 25 basis point reduction in the policy rate will do much to address stresses in the labor market that more likely than not arise from structural changes in technology and demographics. However, a cut could have longer lasting effects on inflation if the Fed's commitment to its 2% inflation objective comes into question." And while Jay Powell dodged my question about market valuation, Schmid takes a bit of a sideways swipe at it today, adding in his statement that financial market conditions appear to be easy across many metrics. Equity markets are near record highs, corporate bond spreads are very narrow, and high-yield bond issuance is high. None of this suggests that financial conditions are particularly tight or that the stance of policy is restrictive. So you could probably put Schmid down for objecting to a December cut as well. And I point out that, as I mentioned, the blackout period is over. Lori Logan speaks at 9:30 this morning, and we have Beth Hammack and Raphael Bostic speaking at noon today. So this is the chance to get on the record if you are one of the people who disagrees with the way the Fed is going.
And Mike, we have heard from Beth Hammack before that she does seem more concerned about inflation than other members on the Federal Reserve. Do you get the sense that anyone else on the Fed agrees with Jeff Schmid and does think that the balance of risks signals they need to be more aware of inflation than perhaps structural labor market issues?
Well, there were people on the Open Market Committee who did suggest that they thought that going much further with cutting rates would be a mistake. Alberto Musalem of St. Louis and the folks from the Minneapolis and Dallas Feds both had suggested that that might be the case. So it'll be interesting to hear from Lori Logan this morning. And we don't have Neil Kashkari on the calendar yet, but we'll see if he comes out with something. We know that Musalem's going to speak next week.
Thank you so much, Michael McKee. Great insights, especially given the fact that we've been talking about how, in general, the Fed doesn't care about markets unless they're going down. It does seem like Jeff Schmid cares about markets